Good morning, traders. My name is Adrian from BCR, and I'll be bringing you the latest insights and key levels from the markets. The instruments we'll be looking at today are spot gold, crude oil, and USD JPY. Let's dive right in. First up, we've got spot gold. Gold prices dropped over 1.4% ahead of the US trading session on Thursday, driven by trade uncertainty following President Trump's ambiguous remarks on tariffs. Market sentiment remained cautious as Trump reaffirmed his stance on 25% tariffs for Canada, Mexico, and the EU, fueling safe haven demand during the Asian session. However, concerns over inflation and potential prolonged high interest rates from the Fed Reserve limited gold's upside, as higher rates diminished the appeal of non yielding assets. Midweek, gold prices showed slight rebounds but remained under pressure. The 14-day relative strength index indicates further downside risk. Gold fell below the key psychological levels of 2900, with near-term resistance at 2927 and 2953. On the downside, immediate support stands at 2867, with further potential declines towards 2845, where stronger support could emerge. A stabilization in US yields could provide some recovery, but uncertainty persists. Overall, gold's trajectory remains tied to tariff developments, inflation concerns, and Fed Reserve policy. Traders should watch key technical levels and US economic indicators for further direction. So up next, we've got crude oil. Crude oil remains above the 2-month low of 68.29, trading just below $70 per barrel during European hours on Thursday. Prices dropped early in the week as US refined product inventories unexpectedly rose, signaling weak demand, while hopes for a Russia-Ukraine peace deal agreement further added downward pressure. The US Energy Information Administration data revealed a surprising increase in gasoline and distillate stocks, despite a sharp decline in crude inventories due to a higher refining activity. This triggered a market sell-off, exacerbating bearish sentiment. Fundamental concerns, including global economic uncertainty and demand fears, continue to weigh on oil prices. And crude oil briefly fell nearly 3% this week, with key support levels at 69.76 and 68.50. And a further drop could push prices towards 66.80. On the upside, though, breaking above $70 would bring resistance at 71.15 and 71.47 and 73.34. To sum it up, bearish sentiment dominates as demand concerns persist. Traders should monitor geopolitical developments, inventory data, and tactical levels for further market direction. To wrap it up, we've got USD JPY. The dollar yen rebounded above 149 levels during Thursday's Asian session, recovering from year-to-date lows. The dollar's strength countered the yen's gains amid expectations of Bank of Japan rate hikes. However, lingering concerns over US tariff plans and positive risk sentiment weakened the yen slightly. Despite this, the prospect of continued BOJ tightening due to rising inflation limits significant yen depreciation. Meanwhile, expectations of Federal Reserve rate cuts due to a cooling US economy kept dollar bulls restrained, capping dollar yen's upsides. Technically, the dollar yen remains in a bearish consolidation phase after its January high of 158.88. The daily oscillator remains negative, indicating further downside risks. Resistance stands at 150 and 150.06, with a strong break above potentially pushing the pair towards 151.04. On the downside, though, support lies at 149, followed by 148.57, and a sustained drop below could trigger further selling, leading the pair towards 148 and deeper into the 147.35, 147 support zone. Overall, the dollar yen trajectory remains uncertain, with key drivers being US rate cut expectations, BOJ policy moves, and risk sentiment. Keep an eye out for technical levels and economic data. That's all for today, traders. That rounds up today's market analysis. Thanks for tuning in. Don't forget to like, share, comment, and subscribe. Also, if you have any further questions, and don't hesitate to leave a comment below, and I'd be happy to answer. I'm Adrian from BCI, and as always, good luck with your trades.